Hey everybody, welcome to Charts and Coffee. Great to see everyone. Happy Monday. Hope everyone is doing really well this morning as we kick off yet another exciting episode as the market turns. All right, so what do we have going on here this week? Just when we thought that really we could not see more by way of just straight up, here we go here, let me get to my calendar. Just when we thought we couldn't see more straight up FOMC speak, we get to the last week of the month, which is not only the end of the month, it's the end of a quarter. And we've got Lagarde today. If you haven't woken up and seen what happened to the British pound, that is probably one of the most significant pound moves I've seen in a while to the downside, if frankly not ever. And so we have a lot of central bank activity right now. In fact, that wasn't central bank activity. That was actually the chancellor of killing the pound, apparently. That was actually the chancellor of finance or whatever, some comments made. So monetary policy and fiscal policy are having a heck of a battle over there. And Lagarde is up today. Actually, right now, we've got FOMC member Collins at 10 a.m. Meester today at 4 p.m. Now, remember, what is it, a week or 10 days or 2 weeks, whatever it is, in front of an FOMC meeting, there is this blackout period. The FOMC members cannot say anything. They've got to be quiet. Now, they've got a lot of pent-up things, I'm sure. We've got Powell coming up tomorrow, 7:30 in the morning, consumer confidence. So if you take a look at this calendar, we go into Wednesday. Oh, look, Bullard and more Powell. FOMC member Bowman. We are absolutely in Fed Palooza this week. Meester again on Thursday, and GDP on Thursday, which is one of our main macroeconomic pillars. And then wowza, core PCE. If inflation and the CPI, if we thought that was a major event, PCE is the Federal Reserve's pet inflation number. That's the one that they prefer. That's the one that their models for inflation are largely built upon. That's on Friday. And then Brainerd will be up 30 minutes after that, followed by Bowman, followed by Williams. Oh my, that is the week, gang. Heads up, buckle your seatbelts, keep the Dramamine handy. That's the week coming up. All right. So you know what you're dealing with here. You're dealing with a significant week by way of events and data, PCE, GDP, and then more Fed members speaking than I can remember for a week in a while. And all of this is happening, very interestingly, all of this is happening while the weekly S&P futures sit on top of the 200 exponential. This is happening as the daily S&P is sitting right, just hovering right above the June lows on the Z futures contract. If there's going to be a technical and say hot zone, right? Events, data, FOMC speaking engagements. If anything's going to come to a head, this is it. And then end of quarter, end of month, yowza. I'm not saying that we should take the week off, but if y'all wanted to go meet up in Fiji, I'm down with that. I'm down with that. We can pop some popcorn and watch this from a distance. That might be the safer way to go, which is just my way of saying, remember, gang, is this a caution day, caution week? Absolutely. Okay, absolutely. How do you handle caution weeks, caution days, any high impact, high volatility type events and days, sessions? Shorten the time frame, get in, get out like a ninja, day trade on a 2 minute, 5 minute, whatever your preferred time frame is. Keep the window small, and then consider the weekly time frames. The daily is probably going to be the most hazardous place to be. The weekly will absorb a lot of the volatility. The daily will allow us to trade the volatility. All right. That is where we are. So as always, gang, thank you so much for being here for Charts and Coffee. Let's see what we've got by way of the questions. Kicking it off with, Erica, yeah, Gypsy, I'll tell you what, chuckleheads all week long. Chuckleheads on parade. We have Fed Palooza this week. Should make for some good day trading. We also want to be aware to control risk. Options, micros, more conservative entries, smaller position size. All of that's going to make a lot of sense. All right. Absolutely. Point taken. Good point as well. All right. UNG calls. Yeah, Rich, they've been, Natty Gas got hit hard. Now, we had an aggro position in Natty. Aggro meaning 1/4 budget spend, ideally no more than 1 to 1.25% risk to the account, barring gaps. It's been a tough, it's not in a downtrend yet, Rich. It's not in a downtrend, but to your point, it is quite weak. Lots of bearish momentum sitting at that 200. And remember, one of the reasons we use premium-based stop losses, one of the reasons I advocate it, is barring gaps, which all of us have to deal with. There's no way to work around gaps. No one has a magical way to manage risk through a hole, quite literally on the chart. That said, if our position size is small, we can manage risk. We'll reassess, see if we get maybe a minor low here at the 200, which means I'm going to be keeping a really close eye on, now, not today, tomorrow, whether or not we can take 6.95 out to the upside in natural gas, opening the door once again, perhaps, for an entry on UNG. Aggro would be buying the 200, a little bit more conservative to moderate, would be waiting for that pattern at this level to form in a neutral market. All right, next up is, hey there, Marla. And thanks for bringing up UNG, Rich. I love coming back to markets that are not doing exactly what we want so we can manage them, because that's what good traders, if not, dare I say, great traders do. They manage their positions. They trade what they see. And then remember, it's never personal, right? Hey there, Marla. How are you? Had my best day trading session with you Friday morning. Just wanted to thank you. Marla, my pleasure, and frankly, my job. So thank you very much for putting on those trades, doing the studies, and making sure that you're following the process and managing your risk. You did it, right? If I had some small part in it, I'm happy to know it. But really great work, and thanks for putting in all the effort and study. All right, next up, hey there, Nick. How are you? This is a nudge about any video you might like to share. Oh, right, Anderson. I did look briefly. I'll have to dig a little deeper, because I do believe the last time that we did a session with Anderson, there might have been some technical issue. But you know what? Let me do this here really quickly and see what I get. Because what's really cool about what they're doing is just not having to be, oh, here we go. This was 7 months ago. This is how to set up a trading business. All right, so this is my buddy Toby. This is not on Simpler's website, but it's a really good video. I have watched it, and let me give you the link. Hey guys, Toby. There's my buddy Toby. All right, so let me just grab this link here really quick, and here you go, Nick. There you go. I just pushed it through. And it's basically how to trade up a trading business, not wanting trader tax status, which I do not personally. Again, I don't have any expertise in this field. That's why I hire the experts. That's why I have Anderson take care of my bookkeeping, taking care of my entities, taking care of asset protection, all that stuff. But that's a really cool video. It's about 7 months old. He cut that back in February. Every year, probably around October to February, there'll be some new content out. But yeah, just keep an eye on that. And that, I believe, is Toby's site. Great content over there. I think you'll really like that, Nick. And if you're looking him up, it's Toby, T-O-B-Y, Mathis, M-A-T-H-I-S. All right, next up. And I love when traders ask me about that, because that tells me you're making money. You're not bothered with entities and those kinds of things until you realize, oh, yeah, 60-40 tax treatment's great. when you're trading, say, futures, but when you're trading options, yeah, those short term, I know exactly what you want to be able to do and optimize. So that's awesome. These are great problems, as they say. All right, IB, good morning. Do I trade the London Open or any of the overnight sessions? IB, so why or why not? Really, really simple answer. IB, I'm on the East Coast of the US. I'm actually in Florida. Supposedly we have a hurricane heading our way. Don't know. Thinking about the folks in Puerto Rico. My gosh, until you've been through a hurricane, it's not just a storm coming through, it's the aftermath. So uh, I'm on the East Coast. And so that means that London Open happens for me 3 a.m. And I did trade London for quite a few years in the early 2000s, 2000, 2001, I think about till 2003 or 4. So for about 3 or 4 years, I would get up and trade the London session. Number one, it made me miserable because that's not when a human being on the East Coast of the US should be up. I can get up at 4:30, but being ready to trade at 2 or 3 in the morning East Coast time, that's a big no. And I like to stay married. I'd like not to be making all sorts of noise in the morning while my husband's trying to sleep. So it just became unrealistic, IB. And then on top of that, the price action in Asia is very tradable. That's 8 p.m. East Coast time. From 8 to about 10:30 is a pretty decent window. And frankly, the 7 to 9:30 a.m. window, much more reasonable for me. And actually, it was a better time for me to trade, because what happens is if you get up for specifically London, that's 3 a.m. You really need to get up for Europe, which is 2 a.m. And then everything ends at 4. So you've got a 1 to 2 hour window, and then you're waiting for the US to open anyway. So those are all the whys. Number one being, I'd like to stay married and not disrupt the entire household. So thanks for the question. What are my thoughts on VICI? Sure. All right. What are my thoughts on VICI? 200 propulsion, neutral market trend, could be the minor. You have an ex dividend. Okay. Could be a minor low. I'd wait for tomorrow. Well, actually, I'd wait. If you're going to see this set up for you today, the 26th, let's see if we can take out the 23rd high, 3130. That would be an aggressive minor low break to the upside for a buy. And it's a buy and buy only for me right now. Oversold, buy. That's what I see on VICI. All right. Am I planning on broadcasting with the hurricane coming? Janet, I don't believe we're in the cone of doom. Look, I've been in Florida since 1983. So yes, us longtime Floridians, we absolutely do not give a rip what the Weather Channel has to say. No offense to the Weather Channel, but a lot of sensationalism going on there. Living here, watching the coverage. You ever see that one clip? I think it was a Weather Channel dude. He's kind of leaning into the wind, and then 2 kids walk behind him in the background. That's what Floridians think of weather coverage during hurricane season. Hopefully it's not that bad. Hopefully here on the East Coast, where we continue to be out of the cone of doom. I don't think we're going to get, from what I see right now, we're not going to get hit. But planning on broadcasting is all up to the internet gods. So if I have internet, if I have power, I'll go, right? That's always the plan. But, the funny thing is, when you've lived here long enough, you don't close the shutters up and bring the plants in until the wind's bearing down on you, because these things are so unpredictable. In fairness to anyone trying to predict them, the certainty with which, it's a funny thing, weather people and analysts on CNBC, the same amount of certainty, right? They like to rile people up because they get their attention. And so it's really interesting watching the weather when a hurricane's coming and watching the markets when we're selling off. Very similar vibe. So you know how I feel about that. So as long as there's power, I'll be here. Hey there, Sue. How far away are the expiry dates for options I trade? Sue, I don't like to be inside 3 weeks. If I can help it. Meaning, is there liquidity by way of open interest? Remember, volume is cumulative. So if I'm looking at very low volume at the beginning of the session, that's to be expected. If I'm looking at open interest, I want to know that there's already contracts that are being traded and there's liquidity in that strike. And so as long as I can be greater than 30 days, I'm happy. If I can't, I'll have to make an adjustment and deal with that near-term expiry, in which case it makes more sense to think about where my strike is going to be, because the at the money or slightly in the money is going to be the way to go when there's less time to expiration. All right. M, how are you? My trading business is set up through Anderson Advisors. Can't say enough about them. You and me both. You and me both. I've been learning from them for better than 20 years. And I'm a huge fan of what they do. By the way, I don't want to turn this into an Anderson infomercial. They're who I use. And my advice is, once you're at that point where you've got the very first class problem of having trading profits, then seek out somebody. It is a complicated thing. There are ways that you can set up as an entity. So the books and the courses and your membership and things like that can be deducted, right? I'm not an expert, but seek out the experts when you're at that point in your career. Yeah, and Anderson's who, I've been with. Absolutely. Good to hear that. Very good to hear that. Love it. Love it. All right. Hey there, Sue. Happy Monday. Yes. Thanks for all I do. My pleasure. Truly my pleasure. Gang, I tell you what, I don't know if it's a Gen X thing, but it's my job, right? I have been lucky enough to be able to trade, right, for myself, and then also find a community of people who are as passionate and excited and want to learn about trading as I am. My gosh, pinch me now. Every now and then it's so easy. There's a great book, by the way, called Gap and Gain. It's a concept. You can probably find videos on it. There's a book written by Ben Hardy, Gap and Gain. This is the main concept. And if you want to dive into it, please do. And this absolutely applies to everything I know I do. And maybe, I think traders are type A achiever types, right? We're looking we're actually running to risk and managing it. That's something that most people are wired to do. So we're a little different, but we also tend to be really hard on ourselves, right? It's so helpful to remember that living in the gap means we cannot acknowledge how far we've come as a trader, how much we've learned, how much we've been able to do. And the gain is to be able to look back and say, oh gosh, this is how far I've come, and just appreciate it. So the way I look at it, it's my job. And if I'm living in the gain, if I'm living in that, I'm in a good spot. AMD, it's a downtrend. It has been set. It's been set since September 15. We are in a downtrend. 21 propulsion means a 21 exponential is valid for a short the rip. The 8 exponential also, but even more so than that, you've got a wonderful volume ledge sitting at around 77 to 77.35. I'd say kind of right around 77.10. So if we rally up to that area, you've got a volume ledge overhead. So short the rip on that AMD. Would I trade options with expiry 6 months out given the fickle market? The more time, Sue, that an option has to expiration, the more it costs, right? So that's going to be part of your risk. What an option costs, even if you're using a credit spread or something like that, or even a debit spread, any way that you're looking to reduce the cost of the option, still think about a certain percentage of that option will be inherent to your risk. The larger the option, in my scales of risk and reward, the more the risk. So 6 months is fine, but I think more so than anything, we have to be sure that the trade has that kind of validity. 6 months for me is definitely a daily time frame setup, if not a weekly time frame setup. And so that's where on Tuesdays in the Sector Secrets Mastery, what we do is we take a step back, look at the weekly charts, and I show people how I buy the underlying shares, how we actually buy the stock with a longer term time frame horizon, or buy the ETF with a longer term time frame horizon. Okay. So I would keep that in mind in terms of the time horizon and the time frame. Time is a great thing to have, but if we don't get the trend and the structure right, time is just now something unnecessary that we're paying for. So great question. All right, gang, and just like that, I am out of time. We have a busy week. Please do take a look at the economic calendar. The one I was showing you was from forexfactory.com. I will see you all same time, same station tomorrow. And in the meanwhile, my Sector Secrets folks and my day trading room folks, I'll see you all there in just a moment. All right, gang. Take care. Be good to each other.